Swing trading Forex is one of the best ways that you can actually trade and one of the most profitable ways of trading. And I will show you in this video exactly how I trade as a swing trader, and I'll show you my personal watch list and what I'm looking for in these setups. So please do like, subscribe, and yeah, let's get straight into the video. So the first thing I'm looking for is I'm looking for an obvious draw on liquidity. Like I want to know what high or what low price is going for. I want it to be so obvious that it's undeniable. That's undeniable. It's so clear what we're going to go for. And this is what I found from you know years of trading is that you do not want to be able to argue for the other side. You do not want to think, oh, you know what, it could be bullish, it could be bearish. You do not want to think that price could do this or price could do this. Here, it could do that. You don't want that. You do not want that. You want it to be so obvious what high or what low price is going for. And I hope most of you think that it's quite unrealistic that we're going to go all the way up here. Because if we just zoom out, or actually let's get on the daily chart. If we get on the daily chart here, this is the second thing I'm looking for, is I'm looking for the trend. I'm looking for the higher time frame trend. I want to see what direction has price been going in and where do smart money actually want to push this thing, right? And if you look, we're on the daily chart here, so if you look, clearly we've been bearish. We've gone down, retraced into this order block, huge displacement down. We've retraced up. Let me get the Fibonacci. The only thing I'm looking for with the Fibonacci is the 50% level. See how we're on the 50% level here? We shoot up here, and now we're below the 50% level. I always like to see price just get to the 50% level because this is where like the large smart money hedge funds are starting to sell as soon as it hits this 50% level. Right, and you can even go on the weekly chart. I mean, just look at the weekly chart. What direction has price been going in? Down. Like it's so like obvious where we're gonna go. And you just want to capture any sort of trend riding this down. Remember, this is the weekly chart. This is the weekly chart ever since 2021. Smart money has been forcing, well, even before 2021. Just look at this price action from here to here. It's a clear downtrend. You don't want price consolidating. You don't want to be confused. You don't want to, be unsure where price wants to go. You want price to be so obvious where it wants to go. It should be so obvious. And something that I've found, and you might think this is a bit stupid, but if you just act like you have no experience of trading whatsoever, and you just looked at this chart, what would you say? You'd say, oh, we're bearish, we're going down. And you can do the exact same thing on the 4-hour chart, right? So we're on the 4-hour chart now. If you just zoom out, we've been going down, we've retraced up. What's more likely? We're going to go down. Now, where are we going to go? Where are we going to go? If we're bearish, where are we going to go to? Are we going to go to this high or this low? Right? Clearly, we're going to go for this low here, like this, right? We're going to go for this low. Now that I've got the higher time frame trend and I've got my drawn liquidity, and it's so obvious where it's going to go, right? It's not consolidating. I'll give you an example of a consolidating market in a minute, just so you know what to avoid. But now that it's so obvious where it wants to go, now I'm looking for my entry pattern. Now my entry pattern is essentially an optimal trade entry, but I also like to see a liquidity sweep. Now what is a liquidity sweep? There's two types of liquidity sweeps, right? I'm just gonna get the path tool up. The first one is let's say we've got a high like this, right? We go below it, just a little bit like that. We go up, we retrace, and then continue up. This here would be a liquidity sweep, assuming we're bullish, right? Let me just mark this out. This right here would be a liquidity sweep. Now, why is it a liquidity sweep? Because price has slightly gone underneath it and it quickly shot off. And you like to see a fair value gap here, but not always. Price quickly shoots off. That's how you know it's a liquidity sweep. And ideally, it would be a wick. It would be a wick that does this. We quickly shoot off. And then I'd be looking to enter on this optimal trade entry here, right, like this. Obviously, assuming that it hits my entry here and then ride price up. That's what I would be looking for personally. That's essentially what my trading strategy is. Okay, here's a trade that I was on Euro AUD. Unfortunately, I couldn't take this trade because I was already in a trade on AUD CAD. And this is very important, by the way. If you're in a trade on, let's say, the Australian dollar against the Canadian dollar, you do not want to be in another trade that has the Australian dollar in it, right? Because you get something called correlation risk. And what that means is, let's say the Australian dollar is very weak for whatever reason. And because I'm in a position on AUD CAD, let's say I lose that trade, I would also lose this trade too. Because if I'm shorting this and Australian dollar is very weak, that means that price is going to go up, right? So you don't want to be in two positions on the Australian dollar, risking, let's say, 1% each. Both of them lose for the same reason, because the Australian dollar is weak and you haven't adjusted your risk management, right? You do not want to do that at all. Because Yeah, you essentially open yourself up to more risk than you need to. It's the same way, like, let's get the S&P up. If you've got the S&P and Nasdaq, hey, if you've got ES and NQ, they both move very similar. But let's say you took an optimal trade entry on Nasdaq and the S&P, and you risk 1% on each. Well, okay, let's say both of them lose, which is very likely, right? Because if the S&P, let's say it's going to do this, if the S&P is going to do this and take out that low, right? Nasdaq is very, very likely to do the exact same thing. So you don't want to be risking 1% on each. You either want to half the risk on each pair, or you can do what I do, which is try and select the best setup. Um, but yeah, Euro AUD was a great setup. But yeah, this is one I called on Twitter, so make sure you guys are following me. And yeah, I'm a bit pissed off because I lost on AUD CAD. I got swept, and this one's gonna work, and I'm angry. But anyway, let me zoom out a bit. So essentially, first of all, we've got the clear drawn liquidity, and I'm just gonna get a different broker up because I want to keep this illustration, let's say, up. So what the first thing you want to look for is drawn liquidity, and I'm gonna get on the daily chart. Here on the daily chart, clearly we've got these equal lows here. Clearly, we've got these equal lows that we're going for. Has price respected any order block? No. Has it respected any fair value gap? Right? Can you look at this price action at all and say, oh, we're very likely to, go all the way up for these highs? The higher time frame order flow is bearish, right? And if you just look at it, so we've had our retracement up into an order block, retracement up into these order blocks, retracement up. This is because of was it the Japanese central bank doing something stupid? That's what this huge wick's for, and you can tell because you've got a huge wick, and then price quickly goes back down to the downtrend. And then you've got your retracement up into the order block, and then we've got our retracement. And what do you think's likely to happen, guys? What do you think's likely to happen? Retracement up into the order block and down, right? Something like that you'd expect. And now that we've got the higher time frame trend, we've got the clear draw on liquidity, the absolute clear draw on liquidity. I'm going to get on the 4-hour chart. At this point, I'm looking for my entry. Let's get onto Forex.com because this is on the 4-hour chart. At this point, we've got our clear equal lows that we're going for. It's completely undeniable that price wants to, go for these lows. Okay, you might be asking, how come I didn't use the optimal trade entry from this high to this low? And there's two reasons for this. The first is, do you know how I said I like to see a good, like a swing high taken into my entry? Like I like to see that. These highs, you can call them highs, they're not really the best. This has a lot of liquidity though, a lot of liquidity there, and I like to enter as there's been a stop run. You know? And the second reason, probably the more important reason, is if you go on the daily chart, go on the daily chart. Remember how I said I don't like to put my stop loss at a fair value gap? There's a big fair value gap there, a big fair value gap. Let me just mark it out. So I was originally going to put my stop loss here. I was originally going to do it there, and then I looked on the daily and I saw this big fair value gap. And the moment I saw that, I was like, do you know what? My stop has to be up here. It has to be up here, right? And you can just use the 4-hour to get away with it, but you can see there's a bit of a fair value gap there, and it's risky. It's risky. It's always risky to have your entry near a fair value gap. And yeah, fortunately, I put my stop here. I mean, I say fortunately, I didn't even trade the thing, but that is how I would use my model. Just a simple continuation pattern. Simple continuation. And yeah, honestly, that's as easy as trading can get. You want a clear trend, clear liquidity, and then you want, the optimal trade entry, which, the entry pattern is quite easy. It's just a Fibonacci. The only thing that can get difficult is where do you want to put the Fibonacci from? You want to put it from this high or that high? You could put it from this high, and then you'd be wrong in this instance. Like, it's just the way it is. And then sometimes you'll put your high here, but the retracement won't be that deep. So let me just show you. Because there's no perfect like model in trading, is there? There's nothing perfect in trading. Let's say I put my entry here. The retracement could have been something like that, and then gone straight off without me. I would have missed it. But if I had my entry here, I would have made it, and I would have got full take profit. And at that point, it's just up to you. You could have your high, you could have your Fibonacci here from this high or from there. But yeah, and the last thing I've got on my watch list is what is it, the Nikkei 225, the Japanese stock index. Let me just clean these charts actually. What I'm looking for here is you see this high here. See how clear and obvious it is that we're going to go for this high. making, what is it, higher lows, higher lows. You see how there's no respect for this order block. I always like to see that, no respect of an order block. Because this technically, if we were bearish, should be a bearish order block. And, you know, there's no, the wick has literally broken the order block. It's broken it. There's no respect of it whatsoever. So if you zoom out on the charts, we are bullish, barring this, I don't even know what you would call it, like a flash crash sort of thing. If you go on the, let's go on the weekly chart. You go on the weekly chart, like you see how it's just a wick. You can kind of just ignore it, but the overall trend is bullish, just like all indices really. And you just want to look for any sort of way to just ride the price up. Look at that, just retrace it, but always ignore these wicks. Especially, I don't know when you're watching this, but we've got the U.S. election in a few weeks. You've got weird stuff happening in the Middle East. When you have these big news events, you get these huge wicks like that, and you've just kind of got to ignore it because this is essentially this week here was just news events. By news events, I don't mean CPI. I mean like real stuff. So like let's say like the U.S. election, conflict in the Middle East, that sort of stuff you can't predict, and it's not on Forex Factory. That sort of stuff. I mean, but yeah, if we get onto the 4-hour chart, we know we're bullish, and then at this point, I'm just looking for liquidity. We've got this high here. It's pretty obvious that we want to go for this high here. The price action here is not the best. It's pretty ugly, and ideally, I'd be in any other indices apart from this. But it is what it is. We've got our liquidity sweep here. You see how we swept it. We've gone into this order block. Watch the wick. You see how we wick into the body of this order block. See the horizontal line. We wick in, and then we instantly shoot off. And then what do we do here? We wick into the order block, instantly shoot off. And then we go into this fair value gap, fill this up, and then go into this order block here, and then up. And yeah, I'm hoping maybe we get like a retracement, something like that, and then I can ride price up. We'll see. This is just my live watch list. But yeah, that's pretty much exactly how I trade. Like I've given you everything I use. You can tell literally my swing trading model. This is my personal watch list here. Here are all the currencies. And I did tell you that I was going to show you an example of like a choppy consolidating market. And here's an example. The order flow for euro against Swiss franc is bearish. It's just the price action is disgusting. Absolutely disgusting. And yeah, I do not want to be trading. This is the drawn liquidity. Like it's quite an obvious drawn liquidity. It's just, where would you even put your stop at this point? Like maybe up here, but this is a prime market for something like this to happen. And then maybe go down like that. And then it'll probably leave equal lows and then keep going up like that. I don't even know what I'm doing at this point, but you know what I mean? It'll just consolidate. And you want to avoid this market. This is choppy and you want to avoid it. Just wait for it to clear up, and CPI could definitely be the catalyst that we need. But yeah, that's literally what I do. I've got all my pairs, all the indices, everything, the commodities all marked up on my charts, and yeah, it's as simple as that. That's all I do to trade. But yeah, this is my trading model. This is the culmination of I don't even know, tens of thousands of hours worth of work, and it's led to this model. And you know what? I'm proud of it. It does the job. It's got around a 50% win rate and a free risk to reward, and it's more than enough to be profitable. It's more than enough to make 10k a month. It's more than enough to retire your family, do whatever you want. And if you want my personal model, which is literally this, but laid out with all the back testing, with the journals, with everything that I've got, there's a link in the description and in the comments. And if not, please do like, subscribe, leave a comment for the algorithm. I really do appreciate it. And yeah, let me know what other videos to do because I might run out of ideas soon, boys. And yeah, I'll see you guys later. Peace.